Good day everyone. Hello and welcome back to Sterling's Global channel. I'm Arful and I'm the founder of Sterling's Global, a UK-based accounting firm specializing in e-commerce and local businesses. As always, thank you so much for tuning in today. If you're new here, glad you could join us. And yes, everyone is welcome on this channel. We do have a deep dive into different pain points and challenges that our clients usually have and discuss valuable insights that can help entrepreneurs, self-starters and freelancers. For today though, we are continuing our series on VAT or value added tax of different member states in the EU. You can check out our discussions, but we will be focusing on the VAT regime in the Czech Republic. You are likely wondering, why do you need to know about VAT in the EU? If you are an e-commerce seller, such as myself, VAT compliance in every country is actually among the trickiest aspects of running your online store. Here is a wisdom nugget. What applies to one country doesn't apply to all others. I can very much relate as to how stressful complying is to avoid penalties. And let me tell you, these fines aren't something you want in your business. They can be such a massive setback. Although I sound so negative, don't be disheartened. You know that European market is very financially rewarding despite the VAT related changes and challenges. We at Sterling's Global understand this roadblock to your operations, which is why we are sharing with you 5 interesting facts about Czech Republic VAT. The Czech Republic is a diverse economy known for being export-oriented. Although it is a member of the European Union, which is the EU, it uses its own currency, the Czech koruna or CZK, rather than the euro. If you do business in the country, your Czech Republic VAT liability may seem higher than usual because of the conversion differences. Besides this surprising detail, find out 5 more things about the country's VAT system to ensure compliance and reduce the risk of oversights that may weigh on your bottom line. First off, the standard VAT rate is 21%. Like its fellow member states, the Czech Republic VAT regime follows the main directives outlined by the EU. One of these fundamental requirements is adopting a minimum standard rate of 15%. The country's standard rate is 21%, levied on most goods and services. The country charges reduced VAT rates of 10% and 15% on particular categories such as foodstuff, agricultural supplies, pharmaceutical products, newspapers and books. When you do business in the Czech Republic, it's crucial to apply the correct VAT rate and collect the corresponding tax due. Overcome the burden of calculating your Czech Republic VAT liabilities when you work with Sterling's Global. Our team will handle your increasingly complicated tax obligations so you can focus on making complex business decisions. Secondly, know the thresholds of VAT registration. Registering for Czech Republic VAT is necessary when performing taxable transactions such as distance selling via the internet. The registration threshold, however, differs depending on where your business is headquartered. For EU-based e-commerce sellers, you must apply for VAT number if their annual turnover exceeds €10,000 or roughly CZK, which is the Czech Republic koruna, 240,400. This EU-wide threshold, implemented on July the 1st, 2021, was part of the revised cross-border trade rules on VAT that abolished country-specific limits. While there is no registration threshold for foreign companies, keep in mind that they need to register as a taxpayer if they make a taxable supply of goods. This registration obligation won't apply if the VAT is to be declared and paid by the recipient instead. If you are confused about whether you are required to be identified or VAT as a non-established person, know that the Czech Republic accepts voluntary registration. Once you have your unique identifier, you must collect tax from taxable transactions and remit the amount to the authorities. Third on the list, you can register for Czech Republic VAT yourself. Once you have decided to be VAT registered in Czech Republic, you have two ways to do so. Now, understand each process to know which is the most strategic alternative for your business. First, standard VAT registration. Under this method, you can apply for a Czech Republic VAT number through the tax office for the Moravian Silesian region. It is the tax office managing the obligations of businesses without a registered office or fixed establishment in the country. Along with the application form, you must include the following annexes: articles of association, VAT or similar tax registration certificate from another country, trade license or certificate or other authorization to business activity, business register statement. The above documents should be ideally verified copies of the original and translated into Czech. Although official translations are not required, it's best to have them done by a certified translator in case the tax office asks for them. After compiling the application form and annexes, submit them electronically. Unlike other EU member states, you don't need a fiscal representative to register for VAT in the Czech Republic. But if you have no physical presence in the country, it's faster and more efficient to work with an experienced local tax agent, such as at Sterling's We Can Help You. You must also furnish a power of attorney if you use an agent. Right, so move to the second option here, the IOSS. IOSS stands for Import One-Stop Shop, an electronic platform introduced under the EU's revised VAT rules on cross-border e-commerce. If you are an Amazon seller planning to tap into the Czech Republic market, you may register for VAT via IOSS. With a single registration, you get an IOSS member that you will use for reporting collecting VAT from sales made within the EU. Through the platform, you can file the corresponding returns for your VAT liabilities. Some countries, however, require an intermediary to handle the submission and payment of VAT to local tax offices. Keep in mind that the IOSS only covers import goods with consignment value of €150 and below. If the value of your products is above that threshold, you may need to obtain your Czech Republic VAT and to disclose taxable transactions. Number 4 on the list, you must submit other VAT reports besides returns. Once you are registered for Czech Republic VAT, you have reporting obligations to meet to comply with the country's tax legislation. Next on the list is VAT return. As a VAT payer, you must report taxable transactions through periodic return submissions. The standard reporting frequency is monthly. However, you may find out later on that it can be changed to quarterly if your annual turnover for the immediately preceding year is less than CZK 10 million. You are considered a reliable VAT payer and you have been registered for 3 years. VAT returns are due by the 25th of the month after the relevant tax period, which can be a month or a quarter. Also, they must be submitted electronically. According to the VAT Act, keep in mind that any VAT due should also be remitted on the set deadline for returns. Right, so let's move to the next one, guys, which is the VAT control statements. On top of periodic returns, non-established VAT payers must submit VAT control statements and file them electronically. There are supplementary filings covering additional details taken from invoices of certain taxable transactions. This requirement aims to help authorities detect and stop VAT fraud and tax evasion. To know which information should be included in the control statement, work with Sterling's Global. We can help you figure out before the deadline. Lastly, non-compliance means penalties. As registered for Czech Republic VAT, failure to comply with the imposed deadlines result in penalties. Take note of the following fines you might face if you fail to perform your obligations to the tax offices on time. Late returns filing. Minimum of CZK 500 plus interest, but maximum penalty is 5% of the VAT due of CZK 300,000. Late payment of VAT obligations is second on the list for the penalties. Interest rate of 14% on the VAT due only if the outstanding amount is higher than CZK 200 only. Alright, so it's a very small amount, guys, so just be careful. 14% interest can be a lot, tremendous, if you have to pay a big VAT bill. Alright, so third one on the list is late filing or non-submission of VAT control statement, which is like completely not filing at all and you're late fully, and that's from CZK 1,000 to CZK 50,000 depending on the accounts. If you had any past history of missing out filing, they will give you more and more fines from our experience. Avoid incurring penalties for non-compliance when you work with a fiscal representative or tax agent like ourselves at Sterling's. Right, so how about we do a rundown first of our a short list of interesting facts about the Czech VAT. First, the standard VAT rate is 21%, but there are reduced rates that you must take note of as well. Second point, there are thresholds wherein one has to register for VAT, but if you are unsure of whether you should register, ask an accountant or somebody who is specialist in Czech Republic, or you can just ask ourselves. Thirdly, you can apply for the registration yourself. No need for a fiscal representative or agent. However, we recommend working with one because it's more efficient, and trust us, it just simply makes things a lot better for you, smoother to deal with somebody like ourselves who has got experience in the local of Czech Republic. Right, fourth point I covered was you must submit returns and VAT control statements regularly. The standard frequency is monthly, and lastly, if you don't comply, expect to face penalties. Now let's discuss a few FAQs. The FAQs, I want to point out the first one, which is a very important one, that how long does VAT registration in the Czech Republic take? After submitting the completed forms and required documents, including their translated versions, expect to receive your VAT number within 30 days for the approved application. However, there may be delays in processing, so err on the side of caution with a longer preparation period. Right, second question is, can I estimate my Czech Republic VAT liabilities myself? Sure, you can. However, doing so often leads to inaccurate calculations due to the inaccurate rates, wrong numbers, and missing transactions. Ensure you are paying the right VAT liability when you let a tax professional handle it. The benefits of savings and reduced risk of fines outweigh the costs. Right, the last FAQ is, when do I register for Czech Republic VAT? Ideally, you should identify yourself for VAT before doing business in the country. You may face a fine of up to 500,000 CZK for non-compliance or for not being VAT registered despite engaging in taxable transactions. If you are non-established business, you must register for VAT within 15 days after the initial taxable transaction. Diversifying your business to the Czech Republic can be worth the investment if you understand the rules about the country's VAT regime. Navigate the complexities of Czech Republic VAT with a partner like Sterling's Global, which is ourselves. Let us handle your tax obligations so you can expand across borders without worrying about compliance. So guys, that's all for today. We hope today's discussion has cleared the air out of Czech Republic VAT. To see how we can help you, do check out our site sterlingsglobal.com. We have a lot of accounting related articles and blogs that could help you to stay on top. If you have enjoyed our tips and tricks, or you want to learn something more similar, please like, follow and subscribe to our media channels. We also have a tax community forum, so feel free to post any of your questions there. We will be linking everything below. Again, my name is Araful Islam of Sterling's Global, and I hope to catch you on the next one. Bye bye now.